Welcome back, everybody. Before we continue, I'd like to remind you to visit the resource page for today's program. It has a wealth of useful tools for your practice. Now, please join us as we continue our conversation on ethics. This conversation is moving along smoothly and quickly, and I have so much more I want to talk about. So let's get started here. Jennifer, client records. We touched on this a little bit in the last session about potential issues of having too many records. I think Sharyn touched on that a little bit. Where if we have too much information for a client, both electronically versus or even paper records, which, pardon me, personally, I've been a paperless office, so I'd like to have less paper. What is our responsibilities? We need to have a certain amount of records and hold them for so long, but then what?
Right. Well, because you have a WISP or a written information with security plan, your WISP will tell you what your policy is on that. My WISP says I'm keeping records for 4 years past the date of whatever the filing was, whether it's an offer in compromise or a tax return. That's what's in my WISP. So every year I get to go out to my garage get into the locked case, pull out all of the tax files from those years and send them off for secure shredding. Generally, we're supposed to keep records for at least 4 years, but it really is like the time to be thinking about that is while you're doing your written security plan, so that you've just got policies to follow, and it makes it super simple after that. I used to keep records locked in a storage vault in my basement for way longer than that, but that was before I had a WISP. And, it was sometimes helpful when a client would say, what did I pay for this house when I bought it? Or how much did I put into improvements back in 2007? I did have that data back then. So, but really, you need to be destroying that data when you're done with it. And you should have a WISP that says exactly what you're going to do, what you will keep, and for how long. And that includes old computers. Like when you got those computers in the garage, you really are supposed to destroy those hard disks once you are no longer required to keep that information. So it's a double-edged sword. And then the other thing, I don't know if we're going to be talking about protecting client data as far as not disclosing or using.
We'll touch
Okay.
on that. Let's stick with the
Okay.
initial
All right.
right
Yes.
now. Thank you.
Yeah, but you think about that and really plan it out when you're doing your WISP, and then follow your WISP.
All right. Now, Sharyn, you brought up the representation case a little while ago about the person that had all those PCs sitting around.
Pre-WISP days.
Well, yes, pre-WISP day, but that really helped them out. I mean, they needed that information, correct?
Right. And it's something you could still retain. If we have to keep up with basis, net operating losses, these are things we need to track. Those kinds of items you can pull out from that computer, or you can pull out from that paper file, those few pages that you need to support a tax position. And anything else, things that are going to expire in a statute of limitation, we can go ahead and destroy. The one thing I would add to Jennifer's, besides the WISP, is use your engagement letter defensively in these kinds of situations where you can go ahead and put in your engagement letter, you're going to tell your client, I don't keep your records beyond a certain date. I'll let you have the option of having them back, or I will securely destroy them. Your choice. I'll remind you when the time comes. But we're going to set that up with the clients automatically so that they don't have an expectation that you have those records. And well, as Jennifer's saying, while you're going through that WISP, it's more easily you're able to get a hold of a client and get those items back should they want them.